Thanks very much. So the organization that I run is called Women's World Banking. We're a global NGO that was founded in 1979. And ever since then, our mission has been very focused on making sure that low-income women all over the world have access to the full range of financial products and services. Now, you might say, with all of other women's other needs and problems and all of the other disasters around the world, why would having a bank account be something to be so focused on? But the research very clearly shows, and our mission has really borne out, that while having access to financial services may not be an end in itself, it is the means to so much other empowerment for women. We know that when women have access to and control over financial resources, they are much greater, have much greater voice in household decision making, in community decision making. But we also know that when women are in control of financial resources, more people in the household and in the community are likely to benefit. Women are far more likely to spend money on things that really drive an impact on generations within a community. First and foremost, their children's education, their family's health care, improvement in their housing, and better nutrition. And I'm not here to throw stones at men, but men don't tend to spend money at the same rate on the same things to the same extent. So just to set that background, that has been something that we've been focused on for, 43, 44 years now. When I joined the organization as CEO in 2006, it was really more or less a membership organization of microfinance institutions working throughout the developing world. And so I very quickly set out on a tour to meet as many of our global partners, again, mostly in the field of microfinance. And one of my first stops was India. And I met a lot of clients, but I met one that's kind of always stuck with me, a woman named Nandini, who was a client of one of our partners in India. And at the time, she was really a very active entrepreneur using all of the products that were available to her. But in truth, all that really was available to her was a fairly high interest rate loan that she took out with a group of women. So she wasn't able to establish her own credit worthiness. She did not prove to a bank that she was able to repay the loan, but she was on the hook for the other women in that group's repayment of the loan. No savings deposits, no insurance, no way to protect all that she was doing. And she had this really kind of cool business, and she borrowed to buy a piece of equipment that would flatten bottle caps. And then she would sell the flattened caps either back to other soft drink bottlers or as scrap metal. But all that she built and all that she had accomplished with her business, she had really no way of protecting that by virtue of only having access to that loan. And so flash forward, so she's in India. Flash forward to 2010, when the Indian government takes a really big gamble towards a much greater understanding of what financial inclusion really could include. And they introduced a universal identification. So you had a universal identification number, and then it was biometrically readable as well. And within a matter of months, really, millions of Indians had that unique identity. You weren't, if you were a woman, you weren't known only as a part of a group or as your husband's wife, but you had that unique identity. And so then, flash forward a little bit further to 2014, when the government introduced a sort of no-frills bank account that goes by it has a very long name in Hindi, but it goes by the Jan Dhan account. You were able to streamline the know your customer process for millions of women and men. And you had, again, seemingly overnight, millions of previously underserved Indians, low-income Indians in particular, having access to this account. In fact, 15 million accounts were opened on the very first day that the Jan Dhan was made available. And I'm not sure who reported this, but it made it into the Guinness Book of World Records as the largest number of bank accounts opened on a single day. Now, I'm not going to tell you that the Jan Dhan account was perfect. There were lots of people who opened it and then never used it. So it was a very high dormancy rate, and particularly high dormancy rate for women, where you saw up to 55% of the accounts opened by women were not being used on a regular basis versus 40% by men. And so my organization was brought in by a very far-sighted CEO of a large public sector bank in India that had 15% of the market share of these no-frills accounts, but was really, saddled with this very expensive dormancy rate. And so they asked us how could we work to make this product more usable, more engaged, and really more fitting to women's needs. And they asked us this just as COVID hit. And that's really where you saw the investment that the Indian government had made in that digital infrastructure. So digital identification, digital account access really paid off. And in fact, India was one of only 2 countries in the world that made their first round of COVID relief payments only payable to women. And so you saw, again, within a matter of weeks of that first terrible lockdown that we all saw in March of 2020, you saw 25 million new accounts and very long-standing, long-held social norms, very restrictive social norms against women, particularly married women, owning smartphones in their own name. They just fell away, and you saw women opening 25 million new accounts and acquiring smartphones. But the CEO knew that he had this unique moment, and how could he drive greater ownership and greater usage of this account? And so we worked with them to create a product that we started to call Jan Dhan Plus. Our behavioral research showed that if you could get both men and women to save at least 6 times on a regular pace of a similar amount, you basically had a client for life. So we created a product, 5 savings deposits over whatever period of time you choose of roughly $5 each would make you eligible for an emergency loan of $120, which was very meaningful in the lives of these individuals. You also had access to insurance products, and in some cases, if you were interested, a retirement savings account. And this has been a huge success. We're working now with 2 additional banks. We've served 14 million women with this solution. The third of those 3 banks is having great success selling this retirement savings account that I mentioned to the women, which is quite unusual to get not only that immediate savings, but that longer term savings as well. But I think one of the most exciting things that we've learned is that it's been the women agents, the women business correspondents out there in the field selling the product that have been the real superheroes. You've seen just every metric you can imagine. Better sign-up rates, better conversion from the sign-up to an actual opening of an account, higher balance once that account is opened, better loan repayment rates if the woman does take that emergency loan, and better rates of selling from the cross-sell, from the savings deposits to the loans, to the insurance, to the pension product. So much so, and this has been the case with both men and women clients. And one of the things I found very interesting is that the men told us that they liked working with the woman agent because if there was something they didn't understand and they had kind of a dumb question, they didn't want to ask another man. They didn't want another man to know that they didn't know the answer, but it was okay if they asked the woman the question. But we were particularly excited when our success with this product came to the attention of the regulator, the Reserve Bank of India, and they were developing a long-term plan for bringing more women into the financial sector as talent into the workforce of the financial sector. And their target had been 10% by 2030. But when they heard the kind of success that we were having with the agents, they raised that to 30%. So we really think of that as quite a victory in terms of policy. So I think we've got a pretty good idea what works. This kind of really basic digital infrastructure. We know that digital government payments in particular can lead to other kinds of financial services. We know that not just in India, but in sub-Saharan Africa, for example, the number one reason that people will engage with getting an ID, particularly a digital ID, is in order to get a cell phone, in order to partake in digital financial services. So there is a real virtuous circle here, very close interaction. But so why do we have some of these numbers? Why do we still see 1 billion women without digital ID? Why do we still see such a large gap in smartphone ownership in particular? Because smartphone ownership is what drives internet adoption. We're pretty close to parity on the flip phone, the basic cell phone, but when it comes to the smartphone, there's still quite a gap. And why do we still have policy environments that don't take these kinds of considerations into play when they're designing policy, that they're not thinking about data protection, they're not thinking about consumer protection in their policy? So in my mind, the good news, despite this somewhat gloomy picture, is that there really is something that we can all do. And I think if nothing else, each of us is a consumer of some kind of financial services. We know there's really good data that says institutions that have more women throughout their organization and their leadership and their governance and the boots on the ground, they tend to serve more women clients. So the next time you open a bank account or take out an insurance policy or have some kind of financial transaction, take a look at who's running that place and make sure that there's gender diversity. But if you're at a financial service provider, if you're at a bank or a fintech, there are some really important things that you can do. First and foremost is make sure that you're working in a gender diverse team and that you're promoting gender diverse teams. For the reasons I just said, we know those teams lead to more women clients and more cash in women's hands, as we say here at Republica. But I think also very importantly is, especially in this digital environment, there's a lot of talk about data, there's a lot of talk about protection of data, but far too often we're generating data that isn't gender disaggregated, that doesn't break out how women are using products from how men are using products. And even when it's collected, even when it's being generated, it's not being used to design products that are really necessary for women. And then that leads us really to another call to action for policymakers. Require financial service providers to collect that data, use that data, and build products using that data. Prioritize the digital identification and getting mobile technology and greater connectivity into women's hands. And then gender diversity at the regulatory level drives better, more inclusive regulation as well. So I'd really like to close by reminding us that even though we all have a role to play, if we don't keep Nandini and the millions and millions of women around the world like her at the center of our actions, we may end up, even with the best of intentions, not including her. So I'll stop there and take your questions. Thank you very much.
Yeah, maybe you can raise your hand if you have a question, or something else.
Hi, could you please elaborate on the criteria for products especially designed for women, financial products?
Sure. I mean, I think the single most important criteria is talking to the women. So what is it they're looking for? We tend to see three things that are, always at the heart of what women are looking for. Women, regardless, and I would argue there's probably not a woman in this audience that doesn't feel this way. They're time-starved. Convenience is so important for women. Bring the product to her. The least amount of effort she needs to undertake to use that product is going to pay off in the end. Security. Women are much more concerned. Frankly, they're even in the digital space. They're much more concerned about their data being misused. Being able to build trust and make women understand that you have their interest at heart, that you're going to protect their money. The greatest driver that we see of women into the formal financial system isn't to get a loan. It's to have a safe place to keep their money. And that leads to the third thing we see is very often confidentiality. When a woman is saving, she doesn't really want her husband or her neighbors or her mother-in-law to know that she's saving, to know why she's saving. She really wants to be able to protect that information.
Yeah.
Thank you for the talk. I was just curious to know where in the income distribution these women were, because in India 25 million women could just be coming from one single part of the income distribution.
That is such a great question, really, really important question. And I think the ability to reach the lowest income denominator is what we're all really, really moving towards. And my numbers aren't up to date, and there may be others in the audience who know large, more recent figures. But I think we're still looking at roughly 170 million Indian women that are outside of that Jan Dhan system. So you're absolutely right. Reaching the poorest of the poor, reaching those women who are in extremely rural areas is really the next goal. You're absolutely right.
Hi, thank you also from me. It was very enlightening. You were mostly talking about India right now. May I ask what your second and third largest area is of activity where you reach out to those women?
No, I'd love to. I just thought India was such a good case study of moving into the digital realm. But thank you. So Women's World Banking is, as I said, a global organization. In terms of our explicit product design, policy advocacy work, we're doing a lot of work in Indonesia, Cambodia, Vietnam, as well as Nigeria and Kenya as priority markets. We made a very explicit choice to choose markets that had large enough numbers of underserved women that we could really, make a change, but that we also felt had at least policy regimes that were open to what we were talking about and were interested in improving their financial inclusion gender gap that they were facing. But actually, I should also say we do leadership and diversity training for regulators on a global basis. So we have regulators coming from all over the world, and then a project we're extremely proud of that we've done in conjunction with KfW and BMZ is an impact investment fund that also invests globally throughout the emerging markets.
You mentioned this, the impact investment fund, and I was wondering just the money that is either deposited or invested through the banks, are there mechanisms to ensure like that or to encourage it to stay within the local community, I suppose? Just wondering about that.
Now that's a really great question. I think that really kind of hit home for a lot of the financial service providers that we work with coming out of the global financial crisis. You saw a distinct difference with microfinance institutions or institutions that were more oriented just towards serving low-income communities. You saw a real difference in the way they came through the crisis if they were not only deposit taking, but keeping those funds within the community. They were in much, much secure shape, much more stable, much more even profitability coming out of the crisis. So that's been, so far, that's been a really important element of these institutions, is not only mobilizing deposits locally, but using them, putting them to work locally as well.
What would you say are the biggest obstacles in getting women to get the bank account? And maybe if we have time, can you explain a little bit more about the impact investment fund?
I'd love to. So we really think about barriers in sort of three kinds of buckets, I guess. They're the barriers that the woman herself faces. And I'd say right at the top, and even perhaps even more urgently in need of addressing, is digital and financial capability. It's not enough to talk about financial literacy any longer. You have to talk about that digital understanding. And again, it's not just, does she understand compound interest, which is really important, but is she comfortable navigating the phone? Is she comfortable and confident that she can interact with a financial service, with a financial service provider through the phone? And so it's about, not just the numbers, but the attitudes as well. So we've gotten very involved, both in terms of when we design products, making sure that digital financial capabilities piece is built in, but with our regulators, that's become an increasingly important part of what they want to see the institutions that they're regulating. The second is is the financial service providers. It's really, my greatest dream in life is to become obsolete, that there really won't ever need to be another person like me making the case that women are great customers for financial service providers, and why bringing them into the financial system is so important for their own empowerment, for the global economy. But we still are making this case, and amazingly, too many financial service providers don't see it. Now, I'm very hopeful, and I'm particularly hopeful. We've seen this this interesting trend, and it's with our investment fund in particular, where, say, a fintech that's done maybe a Series A or maybe gotten into their Series B, they've broken even, and they start to see that 65, 70% of their clients are women. Fintechs have been very good for women because they provide alternative ways of getting financial resources using data that doesn't require them to go through, credit bureaus that don't even know they're there, or don't require collateral very often. So they can be very, very effective forms of financing. And then they'll come to us and say, oh, wow, we didn't realize there was this client base. So I'm hopeful that some of these newer financial business models can be really good for women. And then that third barrier is on the regulatory side. I alluded to collateral. Collateral requirements by the vast majority of emerging markets, banks and regulatory regimes still require land or built property to be the only security against a loan. And we've had so much success. Most recently, it was very heartwarming. We had done a project with a bank, largest bank in Kenya, building in cash flow-based lending for their women's entrepreneurship program. They were very proud. They wanted more women entrepreneurs. We finally weaned them away from these ridiculous collateral requirements they had. 130% of the loan amount was being required in land. Ridiculous. And so we got them to go into cash flow-based lending. They have now rolled that product out to all their branches nationwide. And we just heard that they've moved that cash flow-based lending into their agriculture portfolio. overall, their portfolio has a 7% non-performing asset rate, which isn't great, but it is what it is. The cash flow-based lending is 3% non-performing. So we've got really good data now to show that it makes sense to move collateral regimes. Credit bureaus, digital ID is a huge priority policy barrier that I think we can make headway in. And I'm not seeing the timekeeper flashing red lights at me, so I'll talk for just a moment. In 2000, I think it was about 2010, we did some research looking at microfinance institutions that had moved from being NGOs or nonprofit organizations to becoming regulated institutions. We looked at 39 institutions that had made this change. We found that as a day time zero, the day that they made that decision, they had on average 86% women clients, and more than half of them had either a woman CEO or a woman chair of the board. Within 4 years, all of them had fallen to an average of 59% women clients, and none of them had women in those C-suite positions any longer. And so we decided that it wasn't enough just to advocate. It wasn't enough just to be an advisor on products. We needed to be an investor that drove that change as these institutions were looking to bring in external advisors. And so that we raised a $50 million fund in 2012. Again, KfW, wonderful partner, joined us on that journey. And then last year we closed on a $103 million fund that's investing in a much broader range of financial service providers throughout the developing world.
One more question. I was wondering, so what is the approach, like how do you approach women? Because you said that you need them to trust you, but also you need confidentiality. So I was wondering, do you have like local partners there, or how do you do it?
Nope, you got it. You named it. We always are working through local partners. And you know, it's one of those things that every time you learn it for the first time. Women really respond best to peers. And when other women are telling them about their experience, or telling them, well, I didn't think the bank really was for me, and I thought I didn't have enough money, I didn't think they'd want me as a client. But when another woman tells a woman, yeah, they did, they really did, and this is why, and this is how, and this is the person in the bank that I saw, that's really gold in terms of building trust. I think another thing that we've recently begun to explore, and I think it has really real applicability in the digital realm, is working with women around their healthcare needs, and having them see that physical health and financial health are really very closely aligned, and that a financial service provider can be engaged in their broader well-being, and again, sort of building that trust over time.
Okay, thank you very much.